Apple Incorporated, Statement of Cash Flows. Major sources of cash. Apple's most significant sources of cash from operating activities in 2016 to 2018 are net income, depreciation and amortization, and accounts payable. Net income for 2018 was 23% greater than net income for 2017. Apple's most significant sources of cash from investing activities in 2016 to 2018 are proceeds from sales of marketable securities and proceeds from maturities of marketable securities. The only positive sources of cash from financing activities are the proceeds from the issuance of term debt and the proceeds from the issuance of common stock. Major uses of cash. For all 3 years, the percentage of total cash flow from operating activities is greater than 100% because several items, such as accounts receivable and vendor non-trade receivables, used cash rather than provided it. Approximately 444% of cash from investing activities was spent on purchasing marketable securities in 2018, compared to 343% in 2017. 83% of cash from investing activities was spent on payments for the acquisition of property, plant, and equipment in 2018, compared to 27% in 2017. The greatest portion of cash in the financing activities section was used for repurchases of common stock and payments for dividends and dividend equivalents. In 2018, there was a significant increase in repurchases of common stock compared to previous years. Net income versus cash from operating activities. Cash provided by operating activities equals net income plus non-cash expenses plus changes in working capital. In 2018, Apple's net income was $59,531, whereas the cash provided by operating activities was $77,434. Non-cash expenses and changes in working capital may explain a significant difference of $17,903. In 2017 and 2016, this difference was equal to $15, $87, and $20,544, respectively. Net income is calculated by subtracting expenses, taxes, and costs of goods sold from the total revenue, whereas operating cash measures cash going in and out from the company's day-to-day operating activities. Therefore, operating cash flow is assumed to be a better indicator of a company's financial health than its net income. Cash generated by operating activities is calculated by adding the net income to adjustments to reconcile net income to cash generated by operating activities and to changes in operating assets and liabilities. Despite the fact that there are significant uses of cash that have been mentioned before, there are also major sources of cash that significantly added to the value of cash generated by operating activities. The difference between cash flow from operating activities and net income may be attributable to a time lag between documented sales and real payments. For example, if customers postpone their payments further, the difference between net income and cash provided by operating activities will be greater. Financial strengths of the business. The company is able to generate positive cash flows from its daily business operations, with the total cash generated by operating activities being equal to $77,434 in 2018, $64,225 in 2017, and $66,231 in 2016. The true profitability of Apple is high and on the rise. The company has strong operating cash flows as it collected more money from customers than it spent on normal recurring operating expenses. Thus, Apple can pay and increase dividends and service debt payments that mature within a year, and is less susceptible to changes in the industry. From this perspective, it may be expected that the company will experience continued success since it has enough financial resources for that. Apple is expanding its business by investing in new assets, such as property, plants, and equipment. The company has also heavily invested in purchasing marketable securities and has generated a large profit from selling them. This means that Apple can successfully manage its securities to generate profit. Since both the cash generated by investing activities and the cash generated by operating activities are positive, the company is expected to be successful in the next couple of years and possibly expand its business. The negative value of cash used in financing activities for all 3 years indicates that more money is flowing out of the company than into it. However, healthy business often shows negative cash used in financing activities as they pay dividends. Given that Apple repurchases its stock, it is possible that such a policy may be viewed as the company's strength. This is because Apple can reduce its tax rate by repurchasing its shares. This will allow for funneling money to stockholders and avoiding diluting existing shareholders' ownership. Financial weaknesses of the business. However, several business weaknesses should be taken into account. Even though the figure for the cash generated by operating activities is positive, there is an increase in accounts payable in 2018 compared to 2017 and 2016. This may imply that Apple is delaying payment to its suppliers to improve its cash flow position. Repurchasing stock may have certain disadvantages, including the high share repurchase price and a loss of investment income. Still, it is not expected that Apple will experience continued challenges in these areas since the pros of such a strategy outweigh the cons. In summary, even though Apple has a mainly strong cash position, the unpredictable implications of its stock repurchase may be regarded as the company's weakness.